Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Welcome to another episode of the ASB Investment Podcast. I'm your host, as always, the man with two first names, Nigel and Grant put together. Today we're joined by not one but two excellent guests. First, a familiar voice. He's basically here every week at the moment. I was thinking on the way in here. He's a regular to listeners, our the resident senior economist.
Yeah, all of that works.
I mean, it's senior because just he's so excellent, I think is the thing. Friend of the show, Chris Tennent-Brown, CTB. How are you?
Not too bad, thank you.
Any new, because you always give us new interesting hobbies and stories. We've been talking about our garden. Anything new you want to?
Oh, the garden's looking awesome. The potatoes are looking like they're ready to start getting...
Now?
Yeah.
Oh, they're not peaking for the 25th of December?
No, I think some of them need to probably come out pretty soon, so that's
Be extracted.
exciting. Yep.
Right, okay. Like you've been helping us with rates, just get on with things.
That's right, and the vines have grown all over the path, so I'm pretty keen on giving it a bit of a tidy up. So
the potato vines?
Yeah, so that's going to start this weekend.
Okay,
and,
the great purge.
Yep, and apart from that, I've been flying my beloved chipmunk, which is good fun.
Yes.
I did a little lap of the Coromandel Peninsula last week.
As one does.
Oh, it's just fantastic. Looking down at the world like a map, it's just beautiful.
Oh, God. Potatoes, piloting, what a life. And alongside CTB, we've got a new voice bringing a fresh perspective. Sounds like a new band or singer storming up the charts. Manu Batra, who's a friend of mine, works at ASB. He's had a wealth of experience in customer lending and pricing strategies. Currently the head of home lending products. So my equivalent, but for the home lending product side. Manu, how are you?
Very well, thank you, Nigel.
And just because the listeners don't, we know you, but the listeners don't, just a little bit of background on what you do for ASB.
Sure, Nigel. So I'm currently the head of home lending products for ASB. My role is really about making sure that it's easier for our customers to get into homes. I look after how our home loan products are designed, how they're delivered, and making sure they're simple, competitive, and flexible for all our customers. Day to day, I will be working with most of the teams across the bank to improve the experience for our customers when it comes to home loans, whether that's around getting a quick and fast approval, making it easy for them to choose the options for their home lending, and providing them with digital tools to ensure they can get the most out of their home loan journey with ASB.
And outside of work, I know we were talking on the way here, you're going through the daycare, the initial daycare sickness battle.
Yeah, it's been a challenge. It's third week in a row where sickness has hit our household. So we're learning, we're pivoting, and we just seeing what we can do as parents at the moment.
That's all you can hang on for the ride, I guess, in those first couple of daycare years. I think you're just going to get everything, and just bear with it. So welcome along, Manu. To set the scene for this episode, we're exploring the latest OCR decisions and mortgage rates. We've done it a few times on the show, recently what's been happening, but, and how ASB is helping customers with their lending strategies. If we get straight into it, CTB, the RBNZ, the Reserve Bank, recently made, in the last, 24 hours in terms of when we're recording this, made its latest decision on the OCR. I guess to put it simply, what did they decide and did it line up with your view?
Well, in the first part of the answer, they did what we thought they would. That's deliver a 25 basis point or 0.25% interest rate reduction to the official cash rate. What surprised us and a few others was the doors open for another reduction, but barely. I mean, the Reserve Bank really seemed pretty comfortable on the sidelines, and when we look at the forecasts and the data that they're expecting over the coming months, we think that's realistic. And with a reasonable set of forecasts for growth and inflation and a reasonable interpretation of what's been going on that front, they come to the conclusion that could well be it. We could be on hold next year.
Yeah. So the next meeting's February?
Next meeting's February, so it's a long way away.
Yeah.
And we get a new Reserve Bank governor for that meeting.
Yes.
But a 3-month gap over summer to do the classic central bank thing of watch, worry and wait. but it's sounding like they're on the sidelines from now on, and which has been our forecast for a while. We just thought they might be a little bit more dovish, as we say.
So dovish meaning they might have cut,
or
willing
to cut in the future. Whereas in contrast, they sounded neutral on the outlook for the cash rate from now on in. So that's what surprised the markets, and we've seen a reaction in wholesale markets off the back of that.
Right, and I think the dollar maybe rallied against
it
US.
Did. Yeah. So we were up quite strongly against the US dollar in the wake of that decision, and we've held on to those gains over 24 hours. So financial markets do respond to this sort of thing, but now the currency will get on with doing its own thing and responding to other data flow. But it certainly has given us a strong 24 hours of New Zealand dollar level in the wake of that.
And just for anyone who's not familiar, I guess, we probably do this every time we talk about the OCR, but, quickly explain again what it is and why it matters.
Well, it's an overnight interest rate.
Yeah.
And it's not a rate that customers access. It's an official cash rate that influences the rates that banks interact with each other, or banks interact with the Reserve Bank when it comes to the very shortest term of borrowing, which is overnight. But from that official cash rate, it has influence on other instruments that banks use for hedging mortgages, such as swap rates that we talk about. And it's those swap rates that reflect market expectations for the next 5 to 10 years.
Yeah, sure.
And it's those swap rates that moved up in response to yesterday's announcement.
And so, Manu, I used to, we sit apart in the office now. We've been, not separated, but sounds like we've had disagreements. I used to sit by you and your team in the office, and I remember OCR day was always, it was a big day. You guys had to get ready and, you refresh on the browser to see what the announcement was. But, every 6 weeks or so. Was there anything, I guess from your chair that surprised you in yesterday's announcement?
Yeah, I think the day was no different to how it's been previously, but in terms of the messaging from RBNZ was a little bit surprising, particularly around the real cautious approach they're looking to take moving forward.
Okay.
And the other thing that surprised me was there wasn't a consensus between all the members. So for those who don't know, there's 6 members that sit on the committee. 5 voted for a change of 25 basis points, and 1 wanted no change. So that came as a real surprise to me as well.
And, we talk about the Economist side with CTB, but from your, were you expecting maybe, like to CTB's point, the door to be left more open to maybe another one in the new year?
Yeah, that's what their tone has been previously. So we were hoping they will have similar sort of messaging this time, which they didn't. So it'll be really interesting to see how this drives a change in customer behaviour, especially when it comes to refixing.
Yeah, so I guess because, Wednesday is the decision, and then it flows on to your desk and what your team has to, straight after. So speaking of, I guess, that's a good segue. Speaking of mortgage rates, Manu, how does the OCR impact what people pay on their home loans? We see the headlines, we see all the media articles in terms of who's moved, who hasn't, and why has this flowed through or not. Why don't rates change straight away when that OCR moves?
It's a great question, Nigel. It's a question we get from our customers quite often. So in theory, when the OCR changes, the cost of funding for banks changes straight away, which can then often have an effect on mortgage rates. But in practice, what really happens is the mortgage fixed rates don't move straight away, all by the same amount as a change in OCR. The main reason, or the key driver for that, is because as a bank, there's various factors that we're trying to balance. One is obviously ensuring that we are looking after not only just our home loan customers, but also ensuring we're providing the right value for our deposit customers as well.
Yep.
It's a challenging time for our deposit customers as rates are coming down. The level of returns they're getting from the deposits has decreased as well. So there's a real fine balance when it comes to ensuring they get the right level of returns there too. We also have funding arrangements, so we rely on customer funding, but we also rely on funding from overseas, which we also need to take into account when we're setting our home loan rates. But we also, keep a close eye on market competition. As we heard at yesterday's announcement, there's a lot of competition in the market today, so we just need to take that into account when setting our home loan rates as well.
And just to take it back to kind of 101, just to put it simply, so you say there's kind of 2 mechanisms where there's sort of like the deposits side and there's offshore. So it's simply not just taking what is deposited from New Zealanders and then lending it out, is it? You've got to be dependent on, little old New Zealand's got to be dependent on this big wide world.
Absolutely.
Yeah, sure. And so, for that, I guess you're competing in a massive market to attract funding, right? Is there any, I guess with the OCR changing, what ramifications does that have, if anything, on overseas kind of perspectives?
I guess the overseas markets that we go to, we'll keep a close eye on what's happening in New Zealand. What does this mean for our future? So that will impact the decisions that we make in terms of funding that they may consider lending to us.
Yes.
So it does have some sort of impact in terms of those.
And CTB, I guess, in terms of how Manu set it out, because it's good to have Manu here to talk about how, someone who's actually in the desk, kind of making those decisions. We sort of talking around it a little bit. But is there anything that Manu's outlined that you think is really important, to hit on again?
Yeah, I think the balancing act between our savers, who are the people buying wholesale bonds or retail term deposits, and our borrowers, who are people wanting to borrow money for a mortgage or borrow money for a business. We do have to balance those off. And then the other force that's in there as well is, what's the broader market doing? Is there a real focus on cashbacks, which there are at times, or is the real focus on actually the bottom line interest rate? And there's a bit of both of that going on at the at the moment. So banks have to balance all of those drivers. I think the bottom line for customers, for me, is always, you've got to decide on what you need to do for your own flexibility. It's just not all about trying to time the bottom and get the lowest rate. Everyone's got different needs for flexibility.
So with that CTB, with what happened less than 24 hours ago, has that changed the house view being like the ASB Economist team's forecast or view going forward?
No, it hasn't. We thought that it would be on hold from now on, with the cash rate at the 2.25 interest rate setting. But we saw downside risks to the economic outlook, and then in turn the cash rate. So we weren't ruling out a cut for
because you hedged your bets
next year.
Yeah.
But so we thought this would be it. Unless the data deteriorated and the economy needed even more support. It seems like the Reserve Bank's very comfortable with that view as well.
Yeah.
So we're both in the same camp of thinking, well, it's possible that there might be another cut, but it's not a base case for us or the Reserve Bank.
And because as you said, that 26 November to some point in Feb is a long time.
Yeah,
it's longer than school holidays.
Yeah, that's right.
Which is a long time, as we all know. Yeah, as we all know. But so over that period, it's a long time for a Reserve Bank governor or the Reserve Bank staff to be sitting, reading, watching, listening to things to see how they're going. But is there anything in particular that you and the team are going to be watching as a potential influence on February?
Well, we get a lot of data between now and then. We get a full set. The big data releases, inflation, economic growth, employment, and the leading indicators for those releases. So business confidence, business intention, will all be key to watch. And I also think it'll be really important to watch what borrowers do over the next 3 months.
Okay, well, that's a perfect. If there was ever a perfect segue, Manu, how I guess we'll talk about it from the customer side as well. ASB, obviously we see a lot of customers looking for the best approach for their mortgages, and that whether that could be mixing things up. Some are rate based, others wanting certainty. How I know it's not your team necessarily out on the front line receiving or having that conversation, but how. What are the key things, or how are you on ASB helping customers work through those decisions?
Yeah, our teams that are helping customers day to day, they really think about understanding each of our customer situation, like what's important to them and what does the future look like for them itself. Really getting to the bottom of what does it look like to make sure that we're providing the right options for them. We have some customers that prioritize certainty and lock in a rate for longer terms, whereas there's other customers who are happy to be a little bit flexible and lock in for a shorter term or keep their loans on floating. So we tailor those conversations according to what the customer need is. My advice always is to get in touch with a team, and you can walk through all the different options with their customers, discuss the pros and cons, and help them weigh up what suits best for their needs.
And just for the absence of doubt, choosing what to do with the entire mortgage, it could be your first ever mortgage, or you've got a full one that's resetting, or you've got bits of it rolling off in this environment, a customer doesn't have to do that. They don't have to do that in isolation, right? So
Yes,
so the bank's job is to help them work out what's best for them.
Yes, absolutely. Yeah, we will understand their needs and think about what options could suit them.
And CTB, I guess from your economics team, the reports you write, which is sort of a translation of everything you're saying here, what are the key things in those reports that I guess can help customers know what, because it's hard to say what to do, but they can lean on to know kind of the context of what they're doing.
Yeah, when we write something like the home loan report, it's a combination of the economics behind our thinking about what's happening with interest rates, where mortgage rates are at the moment, and some things to think about, so that people can sit down and have a read. And I'll be refreshing that document and getting it up on the website over the next couple of days.
Yeah,
and so we're trying to point out what we think with the latest information is the likely path for interest rates, including mortgage rates, and talk about some of these strategies that people can use to A, deal with uncertainty, and B, tailor a solution to their own needs. For example, splitting your terms over 3 or 4 years, so that you don't have one big moment with all this interest rate risk that happens on one day in the next 4 years. Maybe having a couple of tranches and a bit on floating, so that you've got some flexibility but interest rate certainty. All those sorts of things are what we'd hope someone could do by combining our economic thoughts about the outlook for interest rate and some good conversations with people in the team to work out what's right for a customer.
Now, as we know, there's in the intro we talked about there's two sides: there's the deposits and the lending side. We know there is some customers who might be in just one camp of that, others might be in one, and we spend a lot of time talking about the rate impact, I guess, as an economy on lending and borrowing. But if you are in the position where you've got both, or you're just at the deposit side and are mortgage free, it's a balancing act, particularly those who've got it in both sides. CTB, I guess we've talked about it a bit, but how do you see people managing that, and what should they keep in mind?
Well, the flip side to maybe this is it for the RBNZ's easing cycle, and mortgages may be at or very near to the bottom, is that the same could be true for term deposits. So better news for a term deposit investor to have in the background that maybe these rates are about as low as they're going to get. That can still be pretty challenging. I mean, it's not like inflation's gone away, and we've had conversations on other podcasts about the importance of actually getting a real return. So you want your term deposits to be above
tax
the
and
inflation rate and tax. But the fact that they're not likely to fall too much more based on what we know and what the Reserve Bank's saying their outlook is, that's good news. And secondly, the fact that the Reserve Bank, whose job it is to maintain price stability within the economy as best as they can, is forecasting that inflation is going to come down a bit from the levels we're seeing now and remain relatively contained for the foreseeable future.
It's still not going away.
It's not going back to zero.
Yeah.
And but that should be welcome news for people on the savings side of the equation as well, that it's not expected that inflation's going to erode all their returns like we've seen in past episodes.
And CTB, we've talked about the concept of laddering. I guess it goes for home lending as well, but for TDs, if you're in the TD, I guess, position where you've watched rates come down, we've talked about laddering. Laddering being what exactly?
Okay, so the idea here is based on the general shape we see in the interest rate curve as longer term rates are higher than shorter term rates. So really, the way to generate a higher term deposit return is to fix into those longer rates, but that doesn't often suit people from a flexibility perspective. So if you've got some money on term deposits, splitting it into tranches so that you've got something quite long term that maybe won't mature for several years. You could go all the way out to a 5-year term deposit, but something that's going to come up with in the next 12 months. Or people will even do the same over shorter periods to try and tap into the highest rates but still have that flexibility. We're expecting people with term deposits are going to want to spend some of that money, or maybe even all of it, in the nearer term. And so it's that need for flexibility and getting the right rate from a term deposit perspective is the same as what we're encouraging people to do if they're looking for that flexibility but interest rate certainty on the mortgage side of things. So it's sort of two sides to the same coin.
It sounds like diversifying your
interest rate risk, really.
Yeah.
So it's not all happening at one day, and you've got some liquidity on the term deposit side. And I think it's a reasonable strategy for people to look at. But likewise, with rates being pretty low, it's also worth having conversations about, am I investing for a long enough period of time that I should look at some other options as well?
Yeah.
So there's all sorts of aspects to that conversation, but at a basic level, laddering term deposits is a reasonable strategy for a very conservative saver.
I'm just thinking as we're talking, there's a lot going on in this conversation, coupled with rates potentially changing or not changing and influencing what people need to do. When you consider all this, it's great to. You need a place where you can kind of, get some, get access to the one-day, medium or long-term options. And it's kind of a bit of a public service announcement. But obviously ASB can help, give really comprehensive service around all those things and, connect dots between home loans, savings, term deposits and investments. Manu, we can't give advice on this podcast, as we've been saying. Is there any advice about getting advice if customers want support when they're trying to plan out what to do with these options?
Yeah, so we offer all those products as a bank. We offer home loans, term deposits, savings, everything else. So my advice only would be that as a result of us offering those products, we have experts across our business to support our customers with those products. So if you get in touch with us, we'll always aim to connect you with the right person so they can actually help understand your needs, then offer tailored solutions so they meet those needs. So key advice is get in touch and we'll support you where we can.
And I also really like if you're feeling, because a lot of people we've met out there, feeling like you don't warrant a conversation or you need to know everything that's going on, start digitally, right? So get into some of our tools online if you're an ASB customer.
Absolutely.
Have a play around.
Yeah,
I say that by, being careful what to click or not, but play around and then that might help inform your conversation.
Yeah. We have a range of tools, for example, mortgage calculator, term deposit calculator. Those are great tools to start off with.
Yeah.
And then always get in touch and we can help you.
Yeah, and I really like Home Central as well, because you can see all the graphs and kind of when things are rolling off. It's really, really helpful. To the final section now, CTB, let's talk, investment themes. How can people manage their money smartly when both TD and mortgage rates are moving around, or in this instance, maybe not, like the talk around them is moving, but maybe themselves not too much?
Yeah, well, the logical thing that happens when people think, hey, this might be the bottom of the interest rate cycle, is to then ask, well, when might rates go up?
Yes.
And
that seems a pretty natural question to ask.
Yeah, and so I think for people on both sides, term deposits and mortgage holders, keeping abreast of the news over the next 3 months to 12 months will be really important. It's a long time between meetings. The Reserve Bank used to meet 8 times a year. Now we have this big long gap with only 7 meetings per year. But I'll be really keen on watching the data flow and particularly watching that first meeting next year to shape my outlook on anything in terms of clues for where the next move might be.
Sounds like you've got a busy summer.
Oh, I'll be loving it.
You'll be in that garden just reading.
with the radio going, listening.
Not cricket, it'll be just data.
Yep.
Stats NZ report. So I guess just one final point, CTB, and I know, Manu, whether you have an opinion on it, but I guess you've got to be careful what you can say in your seat. But, we've always talked about just get on with things.
Yeah.
Is it with the greatest respect to people's individual situations, does that still apply?
Yeah, I think it does. In use it for borrowers, floating's the most expensive place to be.
Yeah.
So I really think if people haven't come up with a strategy now, they need to. Especially when we get news like yesterday that this could be it. So I think to get on with it, and likewise when I started saying that at the start of this year, if someone had fixed for 6 months rather than floating, well, that mortgage would be maturing now, and they could be looking at it again. So I've always tried to encourage people to think about the amount of money that they have floating, because it is typically the most expensive place to be borrowing, and then think about what terms are right for me to get the flexibility that I need to have for the coming years. So I don't think that changes.
I'll just echo what Chris has said. I think now is the time to have the conversation. If you haven't had that conversation in a little while, talk to us and see if now is the time for you to be thinking about what options are there and what are the range of fixed terms we have on offer.
Yeah, and to play, I guess, a critical message, but you don't have to do that in isolation. You don't have to wait to the Christmas barbecue to talk to someone in your family to try and get advice, right?
That's absolutely right.
I mean, if you were at my barbecue, Manu, I'd get, I'd chew your ear off probably. But thank you both for joining us and sharing your expertise. As always, CTBN for the first time, Manu. Wraps up today's episode on the OCR, the mortgage side, the deposit side, and investment themes that are influencing that. If you've got any questions or you want to chat about your own situation, remember ASB is here to help, as Manu's been articulating. It's, we genuinely are there to have those conversations, and our team across the country can help out with that. To summarise my key kind of takeaways, the RBNZ has cut that OCR down to I guess a new low of 2.25, and that's matched the house view. But there's kind of that door the door to further cuts is maybe more shut than we thought, isn't it?
Barely open.
Barely, a jar? Is a jar barely open?
A jar, maybe a jar is a good word, but a jar sort of implies that it can swing open. I think it's barely open.
Okay, like enough for a pet to get through, but not a human, maybe. Only your cats, maybe, eh?
That's
right. They could sneak through. I guess the OCR reflects borrowing costs, but mortgage rates always don't change in step, and CTB's reports that he puts out obviously can help understand that, the rationale for that, why that occurs, and that's bank competition, international funding, as Manu was talking about, and also balancing kind of deposit and the lending side. And when markets are shifting, it's important to regularly review your investments. Just like we always talk about with your like an investment portfolio, your Kiwi Saver account, it's still just as important. It might not give you as many changes as an investment portfolio, but still, things do move around as and when terms come up. So, seek advice on that and stay flexible. And if we get to our final question now, the one we ask everyone, what's something you've been reading, listening to, or watching that you can recommend? Manu, do you want to go first?
Oh, great question, Nigel. As you mentioned earlier, I do have a little one at home who keeps us really busy. So I've actually been reading a book called How to Talk to Kids So They Listen. So just trying to get on the right path from a parenting point of view to ensure I can build a better relationship with my little one.
I thought that when I saw that title, I thought it was it might have been what you were reading to try and deal with talking to some people at work. But no, I was going to look it up and see what that was. But getting to know you as well, I know you'll be a dotting father.
Thanks,
as
Nigel.
well. So I know you, I wasn't surprised when you mentioned you might be recommending that. And CTB, what's your latest whimsical recommendation?
Oh, well, this is pretty boring and to the point. At times like now, I like getting onto the internet. I mean,
the internet. I've heard of that.
Yeah, it's this new thing.
Yeah.
No, but I of course know what we're doing with our mortgages, but I like looking at websites like interest.co.nz so I can keep abreast
That's
of what
Manu's favourite as well. I know
everyone else
top of his bookmarks.
What everyone else is doing. Clearly, knowing what the competition's up to is important, and likewise for customers, whichever bank you go to, I think to be aware of what other banks are doing is really helpful for a conversation with your own bank.
Yeah.
So I've been reading that over the run into this meeting to see if there's been any jockeying, like we sometimes get ahead of the meeting, and of course I'll be reading. I've read our bank report, but
You've read your own report.
I'll be reading what the other banks are saying and thinking to sort of make sure I'm on the right page and not missing anything. But in terms of fun things,
you've got two.
I went to my local Dolphin Theatre during the week and saw their latest production, which is a wonderful story.
Oh, what was the
Wonderful Life. Was
it the theatre?
It's
The
at the
theatre?
theatre. Yep.
Okay.
And it's just an old story. But it's a goodie, and it's got a Christmas theme to it too, which is a bit of fun.
Oh, support your local theatre industry.
Yep.
Mine was, I read Warren Buffett's final shareholder letter, which was out in the past couple of weeks. He sends one around Thanksgiving each time, and he sort of said this is his last major piece, sort of talking about the company Berkshire Hathaway. Sage advice all through it, but I also, like, the key highlight was also his emphasis on how important luck is in anyone's life and career, and people who discount the impact it has are sort of ignoring that it is a lot of life is down to luck. So I thought, from someone who's obviously done very, very well, it's a bit of humility to recognize that luck played a huge part in their success. So I thought it was a nice way to go out. But I think every year he's going to be writing still around Thanksgiving with his musings. Maybe not in theatre. Yeah, but we'll see if he, maybe he's got a bit more time in his hands now. Again, thank you, Manu and CTB, for giving up your precious time. It's been a pleasure having you on the show. CTB, we've got you pretty much here every second week. And I was just thinking, you're going to be fizzing for that February show, aren't you?
Oh yeah, I can't wait.
Yeah, I guess you'll be.
I'm going to put it in the diary as soon as I get back to my desk.
You'll be, all that information will just be ready to explode. And to Manu, we look forward to having you back on the show. I hope you enjoyed yourself.
That was great. Thank you, Nigel.
And so until next time, happy investing, and also happy keeping an eye on rates, and also, talking to someone if you need advice. But it's bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.